Have you ever take a trade just to see the price move exactly against you? You are not alone. That happens to most of the traders. More importantly, that happens to over 90% of the traders. When they buy, the price goes down, and when they sell, it goes up. It's not just like your bad luck or something. It has a reason to do that. So today, we're going to do the analysis to see the reason behind it and explain you how to take a proper trade so that you don't lose just by seeing your price movement exactly opposite of what you have expected. So let's go ahead and see the reason behind and how can we avoid it. This is S&P 500. I'm right now into 5 minute chart right here. So let's see like how the traders fail on the breakout situation here. Right now I'm in the 5 minutes. So if you go ahead and look into this position here. So everyone thought this right here at 694, this position. Let's just draw a line there. Everyone thought, okay, that's the resistance. And then when they saw here, okay, there was a huge spike over here. Then just broke out that resistance level on this position, and then everyone took a trade in that level here. But what happened is then it went slightly up on that position over here, and then it just fell below that. So when it goes down a little bit below this thing, all the beginner trades like, okay, it's going negative, it's going negative, sell, 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 right? So and then when they sell it, it just stays sideline for a little bit of time, and then it spikes up. This was one of the main reasons to fail on the breakout situation. This is a very common type of the failure in the breakout situation. So if you see there is more on the breakout failure situation, every day, every time frame, you're gonna see that. So let's go ahead and see into the daily, which is a longer time frame, and we can find out similar kind of situation on that situation also. So I'm trying to open the situation here, and we can look into this easily. For a long time, there was a resistance in this area for daily time frame. So you can see, you can find out the everyone thought like, okay, there is a resistance in this area, and when it got up a little bit on this position, and then when it broke out to 688 range here after 682, everyone felt like, okay, this is the time to buy. So let's zoom in a little bit there. So everyone felt like, okay, that's the time to buy, but in reality that was just a trap for the bulls there. So what the pro trader does is, when they just felt like, okay, everyone is right here, they just slammed it down, and then after some time they just broke it down all the way. So but it will come back after, because like after that what they thought is, okay, now it's going down, it's going down, it's going down, let's sell it. And then but it found some support here, and then it just went up again. They're breaking their trade. So to resolve this issue, we'll go into that one in just in a minute to see like how can we avoid these things. So let's go ahead and see the other charts. So I'm going to open on the Tesla, which is a very trade friendly tickers in this thing. So I do have a couple of lines here. Let's just clear up this chart here. So in this one also same thing happened. I'm right now in a daily chart, and everyone felt like, okay, there is a very long-term resistance here, right, in this region of like 473, 474. So when it got broke up here, everyone felt like, okay, it's breaking up, it's gonna go higher and higher. So but in reality that did not happen, and it just came down to the bottom, right? So this is also another common failure in the breakout situation. Similar thing happened on the bottom too. So everyone felt like, okay, there is a support point in this area, and then when it broke down below, everyone felt like, okay, it's breaking down below, it's gonna go down all the way like few percentage down, but that did not happen, and then it just really spiked up. You can see this is very common failure. So we'll discuss about the solution on this thing, but let me show you one more example. We can go ahead and look into, let's say, Meta, which is also max 7 right here. So I already have open daily chart here. You can see everyone felt like, okay, this is a resistance happening once and twice failure, and then but everyone felt like, okay, when there was a spike of these things, so you can see here from like 680 to almost 710, everyone felt like, okay, it's gonna go up, right? It's gonna go up to all-time high or whatever its another resistance level is, but that did not happen. it just got rejected right over there, and now it fell below that. So what happens in reality is, let me just go back to SPY, which is a ticker symbol for S&P 500, and let me just look into this chart one here. So it's already nice and clear, so we can look into that. What happens is, I'm going to open the go to the indicator and then just type volume to find out the volume situation here. And what happens is, normally when you see a breakout, let's draw a line again here at the resistance level that we had, and then when you see a breakout in this position, you should always look into the volume. But here you can see the volume was going down, whereas you were expecting to have it going up and up. But no, when volume is going down, there is a possibility this is just a fake breakout. So that's exactly what happened. The volume was very low and then it just came back down again. But when the volume was going up here, you can just see volume was going up and up. The down, this is like sell volume. So of course that was going down and down and down. So that happens most of the time, and then the trade fails on the beginner trades. So reason one, the volume is not there and just too much of attention there. So we need to look into the volume confirmation. And then another thing we need to look into is the is that gonna work as a support. So when you look into this thing, let's see, when you are looking into a broad form, and then when you have, let's say that's the resistance level we had since a long time, but when people thought, okay, that's a breakdown happening from there, it found a support that was a resistance long time back, and it's going to go up. So we need to look into the bigger time frame to see if there is a resistance on that position. So usually if it is breaking up, we need to look if there is a resistance, long-term resistance. If there is breaking down, we need to look for if there is a support point. So if you can look into that, that would make your trading easier. So if we look into more into the S&P 500, let's go ahead and see over here also. So everyone felt like when you had a let's say there is a support point on this position, right? So they felt like, okay, that's a support point on here. Over here, oh, that's a long time support, like this resistance became support here, just went a little bit, but that was just again fake breakout, went down. But this label has been a longer support here in this position, like which is 650 range, and then that worked as a support for this position also. When even though there was a big sell, you always need to look into the long time frame to see if there is a long-term support or long-term resistance on the market. That's exactly the same thing happened here and then here also. So that's a third point. And don't enter emotionally by thinking, okay. Another thing very important is always use the indicator. Simple moving average is very useful at this case. So if I turn on right now, even though you were thinking, okay, this red big candle, now it's gonna market is gonna go down all the way, there was a simple moving average, 100-day moving average was working as a support point, so that kind of supported here to go all the way up. Same thing happened here. Everyone thought like, okay, market is gonna go down all the way, but there was a simple moving average, 50-day average here to work as a support, and then the market went up. So that's what you need to follow into the while you are trading. This usually for the swing trades, but let's go and see for what you can do for day traders. Day traders normally use 5 minutes to 15 minutes time frame. So let's go ahead and see the 5-minute time frame, how that works. So I just zoomed into the 5-minute time frame, and then I always ask you, or I always request you to see the confirmation in this case also. So while you were here, let's say everyone were working on this thing, and then they saw, okay, this is a start time on the day. So when you saw this, everyone felt like, okay, there's a market went up a little bit, and up at like 10 a.m. market broke down. So everyone felt like, okay, it's broke down and we need to go back all the way. So right after that, another candle went up, but they felt like, okay, this might be just a fake breakout, so it's gonna go down more. No, that did not happen, because what happened in this situation is market wanted to go up, but it took a liquidity sweep over here and then went up again, and then came back again to this label, working as a support point, confirmation, and then went up continuously, right? So that's what we need to look. Couple of points that you need to point out while you are looking for the trades is the volume expanding. Either way, it can be on your sell side or it can be on your buy side. If the volume is going up, 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 then you should be looking that trade. Right now, like if I look into hourly candle here, if I see, like let's say here, anywhere pretty much, you can look into any chart, any position. So there was a volume spike into this thing, so you can see the market went up, up, up. So there's a sell volume going up, up, up. So right, so after that, sorry, buy volume up, up there, I'm sorry about that. So now you can see here the market went all the way down and it went big down because there was this is sell volume, which is a red volume going up. So this is exactly same thing what's happening. Now your buy volume increases, so the market increases. So the volume is very crucial at this point. So second thing that you need to look into is always zoom out when you are in doubt. That's the word the trader says. So even though your 15 minutes time frame might be seeing this one as a heavy resistance, if you go to let's do that one for right now. So if I zoom out into the 15 minutes time frame, I can see here these ones were resistance at that time and then become a support here. Let's go ahead and see the daily time frame, what we can see on that. So if we look into the daily time frame, you can really find out those has been a support point for several times. And if you feel like this one was a resistance, no, now it's working as a support point for your trade. So always zoom out when you are in doubt. So another one is retest and confirmation on that point. Retest is always very important into the trading. So let me just show you in any kind of time frame here. We can look into this in like all day, every day. Like for example, here this is January 26th start point. You saw that everyone felt like, okay, the market is going to go up, and if you felt like couple of candles and if you buy at certain position here, you may feel like, oh, okay, I bought here because by seeing the market is going up and it starts to go down, so you may get scared and then just sell your position there. But after all, the market is coming to your position here to retest that area and then going up again. And that happened again after a certain time. The market came to the retest the resistance level here, but that found as a support point and going up. So always look for the confirmation, retest and confirmation. That's very important into the trading. So to conclude the situation, what smart traders look is they look for the break above the breakouts and then just see the retest on that one. Second thing, they look for the confirmation with the volume, and they're looking for the whether the support is working as a support after breakout or not. Because for example, there was a resistance level, it just broke out here, and they check for whether this one will become support or not. It became, so it came down, but that worked as a support and then went up again. It came back down again, that position worked as a support. So now you can take a position and so that you can just get the money. So to conclude, breakout doesn't fail because the strategy is bad. It fails because the most traders, they always trade with emotions, or they take it in a wrong way so that they feel like it's gonna go opposite of what they are thinking. So always trade with very confirmation. Always double check with the retest and confirmation on your breakouts. Don't just assume and take a trade, and then that way you can succeed into the trading in an easy way. Thank you guys for watching the video, and I'll see you into the next one with like better knowledge and more educated video. Thank you.